Good morning. This is Sam Gurung from Beta 2 Limited bringing you today's market report. Date today is the 13th of Jan 2016, our second week of trading this year. Let me start by looking at equities. Now overnight in Asia, equities actually rebounded from a 3-year low. FTSE 100 together with Stock 600 also opened up this morning, and S&P futures also trading higher. The main reason is basically, or you could see this as a dead cat bounce, or markets seeing the sell-off in equities as excessive. So on the back of that, we are seeing a lot of profit taking. To give you an idea, $5 trillion have been wiped off the value of global shares since the start of this year. Chinese stocks until last night was actually down 15% on the year so far. So obviously not good for equities this year, and volatility has been high as well. Aside from that, the main news that's been making headlines recently is oil. And yesterday oil fell again, falling around 4%, and fell below $30 a barrel for the first time in 20 years. In fact, it touched $29.93 a barrel at its intraday low levels. Now, three main reasons why oil has been going down. Firstly, obviously curbing demand from China. Obviously China is struggling at the moment. There will be lack of demand for oil, and that puts pressure. Secondly, we're seeing a massive supply glut in oil, mainly coming from increase in US stockpiles of oil, but also further supply coming in from countries like Iran and a few other Middle East countries. So on back of that, massive supply glut, obviously putting pressure on oil. And finally, appreciation of dollar. Dollar is inversely related to oil, and with dollar going up, we are seeing obviously further pressure on oil. So oil is actually down around 70% since June 2014. It's down 30% last year. It's down on the year so far. Morgan Stanley have actually come out, and the economists have forecasted oil to fall as low as $20 a barrel. So obviously, very, very bearish for oil in general. Another news that's making headline closer to home is pound. Pound yesterday hit its lowest level since June 2010. To give you an idea, during Christmas period, pound was trading around 1.5 to the dollar. Currently, it's actually fallen down 1.43. So basically, it's lost about 4% since Christmas. It's down even more since autumn last year. So pound's obviously under pressure at the moment, and this is mainly on back of a EU referendum, uncertainty regarding that, but at the same time, not enough clarity coming out from the Bank of England in regards to when the next interest rate will go up. Right now, the consensus is early next year, whilst Federal Reserve in the US are looking to raise interest rate in a couple of months. So there's policy divergence in UK and in the US, basically putting pressure on pound at the moment. Tomorrow will be key for pound. Investors are calling it Super Thursday, when we have a plethora of data coming out which will impact pound further and cause volatility, but that will be covered in tomorrow's market report. For today, thank you for listening in. I'll see you again tomorrow. Have a good day.